Conheça o Gorila, uma nova forma de controlar seus investimentos. Cadastre, acompanhe e analise a rentabilidade de seus ativos de forma descomplicada pelo
this balance between aspiring to capture the benefits for people, for the economy, but also be sure that we do it right. Thank you. I am so comforted listening to you, Jay. In this area, the public sector is very important, and the institutions that hold our monetary system in shape are very important. We also see the private sector playing an increasingly significant role. We see space for public-private partnerships, and I want to turn to Shamsia. Malaysia is part of a very dynamic region. Private sector innovation plays a significant role. How do you see the role of the private sector from where you sit with regard to solutions to cross-border payments? Is there something that you have learned in Asia, in Malaysia, that is valuable for all of us?
Definitely, Ms. Galina, that the private sector has an important role to play in driving. Definitely, the private sector has an important role to play in driving innovation and adoption of efficient cross-border payment solutions. On the supply side, for example, private sector investment and dynamism will be critical to foster continuous improvement and innovation to cross-border payment solutions in a commercially sustainable manner. On the demand side, the private sector players can also support migration to more efficient payment solutions through their frequent interface with and better understanding of end users, which may contribute towards better solution design that addresses prevailing pain points. So even with CBDC, private sector players would have an important role to play, particularly in areas that traditionally fall outside the ambit of central banks. This may include conducting KYC, distributing CBDC, managing transaction records, and providing overlay and value-added solutions to serve the different needs of customers. At the ASEAN level, we continue to strive to realize the vision set out in the ASEAN Economic Community Blueprint 2025, which set to be a highly integrated and cohesive economic region. So in realizing this vision, efficient and safe cross-border payment has been identified as a key enabler and a priority area. In view of this, ongoing efforts have been made to enhance the efficiency of cross-border payments through the interlinking of real-time retail payment system, which will serve as a more efficient alternative to conventional payment methods. And to foster an enabling environment for the establishment of regional payment linkages, the Working Committee on Payment and Settlement System has developed what we call the ASEAN Payments Policy Framework, together with the implementing policy guidelines. So this framework sets up the vision for ASEAN payments integration and the roadmap for the establishment of interoperable cross-border real-time retail payment linkages with at least 5 ASEAN countries to be linked by 2024. But taking into account the diversity of the ASEAN countries and the varying state of readiness of members, the participation in this regional linkage is on a bilateral and voluntary basis at the individual state. So we have also developed guiding principles and policy considerations aimed at establishing a common regulatory approach, common standards to facilitate interoperability, and where possible, local currency settlement to enable better management of FX risk and costs. So we have made some progress on this front. One that I can recall is, like for example, the cross-border tax card payments between Malaysia and Singapore has been linked. So that will enable the Malaysian customers with Malaysian ATM cards to be able to use that cards in Singapore. Thailand and Singapore have also linked to enable the cross-border QR payment that will allow users to make cross-border QR payments starting from the first quarter next year. And similarly, Thailand and Cambodia have also in agreement to launch the interoperable QR payment linkage between Cambodia and Thailand. So these are some of the examples that we have achieved thus far under the ASEAN economic blueprint this arena.
Thank you, Shamsia, and I am very sorry. We do have a bit of a difficulty in the connection with you, but I hope that people were able to follow your very interesting illustration, and I'm very keen to hear also from Augustine. Augustine, you created the Innovation Hub. This is a very bold step in a direction of moving BIS in the front of these discussions. What is your experience so far? How do you see the hub fostering collaboration between central banks and also bringing this public-private collaboration to serve us on this fascinating journey? What has been the experience so far? Where you're headed next?
Thank you very much, Cristalina, for asking this question. We are the bank of the central banks, and the fact that the board decided to launch the BIS Innovation Hub is an expression of the conviction of central banks of the importance of financial innovation. Right now we have 3 innovation centers: Singapore, Hong Kong, Basel, and we are going to open 5 more with the partnership of DCB, with the Nordic central banks, with the Bank of England, Bank of Canada, and a special partnership with the Federal Reserve System. Basically, our mandate will be to scope technology and identify which technological developments will be of importance or of essence for central banks to get familiarized with. Second, to try to identify what are the public goods that could be developed and exploited to facilitate central bank activity, but also to fulfill the roles of central banks in terms of payments, financial stability, and so on and so forth. And third, to create a network of experts just to keep central banks on the lead in these aspects. Agenda of topics are, for example, CBDC, FinTech, RegTech, different parts of payment systems, issues of identity, and eventually we want to be a real catalyzer for action and be a nucleus for cooperation and collaboration. If we want CBDC to really make a difference in the payment systems, we need a lot of cooperation in the areas that have already been pointed out. And I think that we need to bring the different parts together. The BIS is working in this direction, not only through the hub, but also through the CPMI, which is all the collaboration of different areas of central banks in payments and also in research. Now, that doesn't mean that we need to do this as a central bank only issue. There needs to be collaboration with other areas like in the FSB, and needless to say, to have very close collaboration with the IMF would be of the essence. So we are looking forward into it. We're responding to the need that central banks are facing in this area. And what I think is very significant is that the hub is an expression of a central bank's conviction that central banks need to be in the lead in these topics. Thank you very much.
Thank you. Indeed, this is a very clear indication that you have no intention to leave the innovation in this area entirely and only in the hands of private sector. Very clearly, you're taking the lead in that. And I would be interested, Jay, how you see it. Clearly, central banks may have to regulate private sector firms. There is space for partnership. There may be need to counter with independent solutions what the private sector is coming up, going back to Libra. How do you see remaining on the front of these developments? What is the Fed thinking in that regard? And how do you see your collaboration with BIS? Agustin mentioned the special partnership with the Federal Reserve System. So how do you see this new frontier and what role you play at it?
Thank you. So let me start by saying that we strongly support the work of the Innovation Hub and would stress that it's very much geared to creating public goods. We will have lots of conversations with industry and stakeholder engagement, and that'll help us in our work on digital currencies and cross-border payments. We need to work collaboratively with the private sector, and we also understand there's a need to do ways that foster development of public goods. So the private sector is likely to be able to contribute through technological innovation. The public sector brings a perspective that seeks broad public benefits, and with payment systems, there are going to be potentially large network effects that create increasing returns to scale, meaning that we may well see over time emerging a small number of dominant players and ultimately great difficulty in competing with those players. Indeed, that is what we see with a number of the tech giants today in their existing businesses away from payments. We do need to collaborate with the private sector to best achieve our goals, and we're very mindful of the challenges of doing so. And yes, we can be and we must be on the forefront of research and policy development. So the Fed has been working for a number of years to better understand the opportunities and risks presented by technological innovation. We're taking a multidisciplinary approach to these issues, bringing together economists, policy analysts, technologists, lawyers, and others to tackle the subject from multiple angles. We've been able to harness the strength of the Federal Reserve System with our 12 reserve banks and the Board of Governors to help us gain a more well-rounded view of the topic. So, for example, To further our understanding of the capabilities and limitations of different technologies and platforms, we've been engaged in a number of research projects. One set of experiments is being carried out at the Board of Governors here in Washington, D.C. Complementary efforts are also now underway, for example, through the Federal Reserve Bank of Boston, which, in collaboration with researchers at MIT, is developing a hypothetical central bank digital currency. These types of experiments advance our understanding of the risks and benefits of CBDCs, measuring trade-offs between different designs and system arrangements, and assessing security risks. On the policy side, we're also actively engaging with a wide variety of stakeholders from government, academia, and the private sector to gather differing perspectives and expertise about potential CBDC issues, the range of design options, and other considerations. We anticipate expanding this dialogue to ensure that we're developing a broad and inclusive understanding of these issues. In all of these efforts, collaboration with other central banks around the world continues to be vital. Thus, we continue to offer strong support for the research efforts of the BIS, the Innovation Hub, and in particular for the group of central banks around this BIS that we've been working with to evaluate costs and benefits of a CBDC. So we think overall these efforts position us to be able to engage proactively with a wide range of parties on rapid developments in these areas. And as you mentioned, we're doing so within the framework of serving concurrently as supervisor, payment service provider, and issuer of the currency. Central bank money and private dollar-denominated money, particularly commercial bank money, effectively fit together in the current payment system. So any CBDC will necessitate roles for the public and private sector. Thanks.
Thank you very much, Jay. This is fascinating, the speed with which central banks, the Fed, are moving in this direction of making sure that the public interest is protected and is best served with the developments we pursue. And talking about public interest, one of the aspects of our conversation today is about inclusion. What can be done so those who have limited access or at this point of time no access whatsoever to the financial system we are describing can be included? How improving cross-border payments can play a role, and to what extent we can venture in technological improvements that can accelerate this process of inclusion, more specifically digital ID. If we are imagining a world in which digital is the way in which financial transactions take place, how could poor people, especially poor people in poor countries, can be part of it? And Ahmed, I want to ask you this question. You have given a lot of thought to it, especially in this year of leading the G20. So how can we get there? Do we need to put more emphasis on the issue of reliable national ID systems? How do we make it so that we walk on two legs, on the financial side, but also on the ID side?
Well, indeed, one of the very important goals of improving cross-border payments is to enhance financial inclusion in our region in particular, for the reasons, for a number of good reasons, in fact. But a key hurdle to greater inclusion would be the lack of comprehensive and reliable, what you call it, the identity system, whose information can be trusted in other jurisdictions. I agree that offering such a system has to be a cornerstone of global efforts to improve both national and cross-border payments. The establishment of identity systems in the cross-border, which is probably remote, is clearly linked to streamlining the KYC and the customer due diligence processes. In the domestic level in Saudi Arabia, we are working on a national eKYC system which harnesses our national identity system through the KYC ecosystem. The critical factor is how national systems, i.e. national identity and KYC information, can be harnessed in the cross-border context and trusted by all parties. Working with the Financial Stability Board and the Cross-Border Payment Coordination Group of the Committee on Payments and Market Infrastructures, the CPMI, we have identified this objective as a specific building block in the roadmap to improving cross-border payments. This initiative will require extensive coordination among government agencies and financial institutions, as well as support from multilateral organizations such as the IMF. The financial costs of developing national digital ID and building shared KYC and digital ID infrastructure may also be significant, and this will prove a challenge for emerging market economies to fund, particularly in the current environment, the current economic environment. Thank you.
Yeah, thanks very much, Ahmed. A lot of work to be done. And it has to be done recognizing that we are interconnected. We do need to work together. And I want to turn to Augustine. Augustine, how do you see us building a strong foundation for the whole world moving in this direction together? In other words, interoperability, common standards, consistent legal framework. What role do you see for institutions like yours and like mine to make sure that we make progress in a way that brings the world together?
Well, thank you very much, Kristalina. I think both institutions can play a tremendously constructive role. I mean, I think if we think in the international dimension, the huge challenge is to assure that the international operability of CBDCs is there. And this is a huge task. A lot of coordination will need to take place in the areas of technology, in the legal areas. We also have to think what are the economic functions that we want CBDC to play internationally, what are the implications for exchange rate decisions, for example, or exchange or the exchange currencies, what are the implications of that. Therefore, I think that to manage to define the minimum set of standards that are necessary to really have an efficient operability of payments under the new dimension, I think is huge, and it requires to bring all the forces together. I think something that Jay said at the outset, that the outlook of the Fed is, if I use different words, is this is a type of issue that we need to go slow because we are in a hurry, and precisely we need to go slow to avoid mistakes. And we have to realize that when we deal with payments, electronic payments, there is no room for mistake. I mean, if I want to send payments from Switzerland to Mexico, I would not tolerate a mistake, and nobody should tolerate a mistake. And all what can go wrong is there are many dimensions. So the challenge is huge, and therefore the effort behind being successful will be huge. And therefore we need to add forces with the broad membership of the fund, with the membership of the BIS, in particular the concentration of central banks. I think that we can certainly put a very solid team together to make this happen. The FSB has been, and the G20 has been a very important catalyzer already. So there is room for everybody to collaborate in this huge endeavor. Thank you very much.
Yeah, thank you very much. It echoes very much what Jay also said about the importance to do it right rather than to do it fast. And this getting it right, go slow, we are in a hurry, is a message I think would resonate with many in the audience. But go nonetheless and get to the right destination. We recognized Saudi Arabia for placing the issue of cross-border payments at the center of its presidency when it comes down to how we can make the financial system work better, and especially for the more vulnerable people. So Ahmed, I want to finish by turning back to you. You're going to pass the baton to the next G20 presidency. What would you ask Italy as they move into their role to do in this area? What is your legacy that they need to embrace? What next?
Well, the G20 has created a special group to look into cross-border payment reforms. This time, the Saudi G20 presidency wanted to do more. We wanted the major economies to agree upon a roadmap that focuses on the issue that is most hindering the safety and efficiency of the payment systems, namely the cross-border elements of the international transfers. This roadmap features an impressive set of building blocks with implementable steps. During our October meeting of all the G20 members successfully endorsed the G20 roadmap to enhance what we call the cross-border payments. The various building blocks lay out different tasks, in particular for a range of international institutions and bodies that will be invited to report periodically to the G20 on their progress with respect to implementing that roadmap. They include, of course, the FSB, the standard setting bodies, the Committee on Payments and Market Infrastructure, the IMF, the World Bank, and the FATF. The periodic reporting across the future of the G20 presidencies, including the next Italy, will ensure that this work continues. The G20's political endorsement will secure the momentum to drive the work forward. And let me use this occasion to thank all the national and international bodies who worked tirelessly and cooperatively in the G20 in this roadmap. And also I thank Italy for taking this further in the next year presidency. Thank you.
Well, thank you very much, Ahmed. Are you encouraged by the discussion we just had? Do you see that there is a momentum going forward that you helped accelerate? Yes?
Absolutely.
And I see Jay and Shamsia and Agustin nodding. Fantastic conversation. I want to thank you for sparing some of your time. We are in front of an open window of opportunity with the chance to have a long-lasting positive impact by improving cross-border payments, by enhancing financial inclusion. We at the IMF will do our part. We recognize our responsibility as an institution with now 190 members. During these annual meetings, we accepted Andorra, our newest member, and we will partner with BIS, with FSB, and of course with all our members so we can make progress, mindful of the complexities. Just to mention one cybersecurity that Jay flagged in his intervention. Cooperating, we will make progress, we will get there. So thank you, bravo, very, very interesting discussion. First of the additional work that would be done today. Stay tuned, the conference continues. There are 3 more panels on the future of cross-border payments. They would be streamed on the conference website. So join me in thanking the panelists. It is harder today to do so because we are in this big virtual room. So on behalf of all of those who have tuned in, thank you. Thank you.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You know what time it is, and we are with Dave. Well, I always want to say Cryptopolis, but it's Dave Valiers. Isn't that right, Dave? Isn't that the name, the full name there?
Absolutely.
How are you this morning, Dave?
I'm doing great, Brad. How are you?
I'm doing really good because we got a new guy hanging out with us today, and it's Steve Van Meter. Steve Van Meter, good morning to you.
Good morning, Brad. Thanks for having me on your show.
Man, look, it is a honor and a privilege to have you on the show today, and I want to let everybody know that we're going to talk about some economy stuff, how it may correlate to a lot of us as retail investors in the crypto space, and we may even touch, before we get out of here, some of the recent stuff that's happened with regulatory news and what's going on internationally with policy and stuff towards cryptocurrency, especially in the cross-border payments realm. But before we do, we want to open this thing up with letting Steve tell everybody just a little bit about yourself and your background, if you could.
Sure. Thank you. I'm a macro fund manager and inventor of Portfolio Shield. By day, I manage money and help plan for people's retirement. And by night, I'm studying macro and trying to learn all the things that you talk about on your show.
Well, let me tell you something. You really do, too, because I just watched, as I told you off camera, it was about an hour plus minutes or whatever of you on Real Vision. And it was one of the best conversations I've heard about the economy since watching some Milton Friedman videos. I mean, it was just remarkable. So let's kick this thing open. Dave, where do you want to start today with Steve in the conversation?
Well, Steve, I just want to thank you so much for being here. I just feel like I know you so well because of all the YouTube videos I've watched with you in it. I mean, your channel is absolutely fantastic. It's educational. It's really low key, but boy, you explain the complex stuff really simply, and that's really difficult to do. And I appreciate your channel a lot. And your name is Stephen with F-V-E-N, Van, V-A-N. And your last name is M-E-T-R-E, is that correct?
That is correct.
And that's your YouTube channel as well. And I recommend that everybody go check out your YouTube channel because I think it's just absolutely incredibly educational. If you're into macro, if you want to learn more about macro, I highly recommend your channel. Well, one of the things that, you're welcome. One of the things that I see a lot on Twitter, especially when we were back in March, late February and early March, when the market, stock market really declined very, very sharply, was the fact that the Fed was going to step in and provide liquidity to the market. And now, you and I both know that they say one thing and maybe they're doing something else, but they had this impression, they're giving confidence to the marketplace that they're going to step in and do whatever they can. I mean, and there's no limit to the amount of money printing, or at least that's what a lot of people were talking about, money printing. Does the Fed actually print money and provide liquidity to the market is my question. I don't think it does, but let's hear your answer.
Yeah, and those are almost two separate questions that we need to kind of look at from different angles. And I think that is a great question because there's a lot of misunderstanding in March. Of course, we always hear the Fed say, as you mentioned, what we want them to hear to say. It's like going to your parents and saying, hey, can I have some money for an ice cream? Sure, you can. It's like, you always want to hear that certain answer, and the Fed's always going to give it to you. So let's address the first piece. Can the Fed print money? And the answer is they cannot. The Federal Reserve Act of 1937 prohibits the Federal Reserve from printing money. So when they came in and said, we're going to do quantitative easing, and we heard Fed Chair Powell on 60 Minutes said, we're printing digital currency. Well, that's not true at all. In fact, we actually heard Ben Bernanke back during the great financial crisis make a very similar statement of saying, hey, we're printing money. And then later on, when, well, no one was really paying attention, he quietly said, yeah, we really can't do that. Now, where does this liquidity injection come from? Because the Fed actually can inject liquidity in the short term, but not over the long term. And it's not through quantitative easing, it's through what are called repo loans or swap lines. So what you see is the Fed will take treasury securities on loan for cash, or with foreign central banks, they'll take foreign currency on loan for cash. Again, all of those are loans. They do have to be repaid in dollars. They have a term. They're not indefinite loans. Sometimes they're as short as 7 days, and I think we extended them as far as maybe 30 to 90 days in all of this. That is the only way the Fed can inject liquidity. The problem with that is they have to be paid back with dollars. So the end result is whatever liquidity came into the market to solve the problem eventually gets pulled back out when those loans are paid off.
Okay, so we are in a debt-based economy. I mean, in order for us, for example, the commercial banks, if they lend, that's basically money printing as well, right?
Well, I wouldn't call it money printing. I would say that is how money is created. So when
Right.
banks lend to consumers and businesses, so for example, for your listeners, let's say you went down and buy a car and you finance it. The money that is financed is brand new money created into the economy. So it's not really money printing. It's just how the system actually works.
Right. So what happens? So lately, of course, we've been in this pandemic now since the beginning of the year, approximately, and we've seen, and I watch your reports every week, and really the amount of lending that's going on by the commercial banks has been declining. What is that going to lead to, and what does that really spell for the economy?
Well, that's a great question, because the lending data is something almost nobody looks at. And on Fridays at around 1:15 Pacific, what's called the H.8 credit data comes out from the Fed. It's probably my favorite data source that nobody looks at, because it really tells you everything. So in a debt-based economy, you need a constant expansion of debt. And ideally, you need that expansion of debt to run at a certain rate. And when you see a deceleration, or even worse, as we're starting to see now, a contraction in that debt, that tells you that money is being destroyed when it contracts. And in a debt-based economy, that leads to asset prices falling, leads to weaker economic data, weaker economic growth, and it's not something you want. The problem is the Fed has no direct tools to stop that from happening.
Right. So, I mean, we understand that the lending has declined. I mean, there's a lot of reasons, right? I mean, we got nearly 30 million people unemployed in the country. That's going to really reduce loan demand. But also, the banks have been tightening their credit standards.
Yeah, that's a great point. So right now, as of this week, or as of last week, we have 25.25 million Americans on some form of state or federal unemployment benefits. And last I checked, you can't get a loan when, if you list, say, where I'm at, the state of California as your employer, and you cite your unemployment benefit as your income, that really doesn't work at all. So what we've seen is banks tighten lending standards, and they're doing this for what seems like the obvious reason is there aren't that many good customers out there to lend to. Now, there's another factor too. Rates are fairly low. And so if you look at and say, okay, I want to borrow money, maybe say 2% over a 30-year period. Why would a bank want to do that? I mean, Dave, you wouldn't give me that loan if I said, hey, Dave, can I borrow 100,000 for 30 years at 2%? You'd be like, yeah, probably not. not, because the risk is to you. You know, there's not a lot of money to be made on that loan if I default. And the risk you have as a lender is, well, could I repossess that asset to Steve post as collateral and hope that it's worth enough that I can sell it to get my money back? And right now, that is not the case. The banks are very nervous. And so they're tightening lending standards because what they want to do is they want credit to constrict. And I know this is an odd view that not many people have, but I do, is that the banks want lower interest rates because they need high quality credit borrowers to come in and borrow. Now, who are those people? Well, they're the people who don't want to borrow. They're the rich of the rich who have, you know, we see in the data that most of the wealth right now is concentrated in a small number of people. And it's at one of the most extreme positions that we've seen since the Great Depression. Well, the banks need them to come in and borrow money because they know those people will pay it back. Problem is, they don't need to borrow money. They have money. There's no opportunities out in the market. So what we see with the banks is, as they tighten lending standards, that causes interest rates to come down, which again tightens financial conditions. And effectively, they're forcing not only the Fed's hand to do more, but they're going to force the federal government into backstopping loans down the road and offering guarantees to make the banks feel safe about lending at these low interest rates.
Well, if interest rates are already low, and it looks like they're heading even lower. In fact, the 30-year note or a bond this year was at 2% early in the year. It dropped significantly during the March decline. In June, it was up around 1%.
Os resultados falam por si. Ao longo desses 9 anos de existência, aprovamos milhares de candidatos em diversos concursos do país. Até mesmo neste ano difícil, vários
1.6%, and it looks like it dropped again. And that 1.6% seems to be like some sort of ceiling. It hit 1.6% early this month, or maybe the end of September, I forgot, and then it's dropped back down again. So even though we've got lower interest rates, we still have, you know, a fairly good sized workforce, even though we've got a lot of people unemployed.
Turn back to Dinell, also given your experience at Mozilla. So how do we ensure that in this new world we will have interoperability across different types of platforms? Now, I understand that on Stellar itself, you have, you know, tokenization allows you to trade all sorts of tokens. It can be CBDCs. Central banks can issue CBDCs on your platform, if I understand it correctly. But how do you actually scale it up? And how do you ensure that, you know, if others, for example, MasterCard has launched a platform, as I understand it, for central banks to test their CBDCs on their platform. Now, for a central bank out there, how do they decide? You know, if I test on Stellar network, would that work also on the MasterCard network? So, you know, these are the issues from a practical point of view would be important for the policymakers to understand. Maybe we can start from Dinell, then maybe swing back to Rory as well. Thank you.
Yeah, thank you, Dong. This is such a great question, and it's one of the things that actually hits back to the question that you asked about Libra. I think that the focus that we have on open, decentralized, permissionless networks, which is what Stellar is, and which is what we focus on building, and we try to actually integrate with the incumbents, like with respect to MasterCard, for example. We have to make it really simple, especially when it's a new technology and you're actually trying to integrate with these different stacks that exist out there. You have to make the on-ramp to the network very simple. And that's where the interoperability and the standards come into play. And from just all of my years of focusing on standards, and this is what we did exceptionally well at the very beginning of the web, and when we focused on the internet technology, there was a massive focus on standards and trying to build this ecosystem that anyone could join if they chose to. And all they needed was to understand like how to get onto the internet, and then they could build their own website, or they could build other engagements and opportunities with end users. That's what we're trying to do here in what we call the Internet for Payments. So it's the same idea. An open permissionless network is important. And making sure that network is easy to interoperate with, which is what we try to do and strive to do here at SDF and on Stellar, but lots of entities out there are trying to do the same thing. This is what creates the opportunity for there not to be a single incumbent, which I think is hugely important in this space. Because we've seen years later, 20 years later with respect to the web, what happens when certain players take over and own all of the full stack. It makes it very hard for new ideas and innovation to come up. And so the idea is if we can continue in this space to make it simple and to create that interoperability and that focus on standards, then we actually can continue the notion of this innovation, which is crucially important to success here. So I think if you think about get the on-ramps to Stellar, for example, making it easy for issuing tokens on and issuing value on Stellar is very simple. It takes one line of code to be able to issue whatever token you feel like is important for your business. There are gold tokens, there are silver tokens, there are USD tokens, there are fiat-backed tokens that exist that I think are super useful and very similar to what CBDCs can be. In fact, you could see a central bank issue as a CBDC and then have the private sector and these these entities out there that are exceptionally good at having that consumer focus. These fiat-backed entities, they could actually be the glue for the consumer base and CBDCs to be issued and used on a variety of different networks that are out there. So I think in all of the years that I spent focusing on how to build standards, it takes that you can show the simplicity of it, and then you come together and you really try not to be the winner-take-all model. You really try to understand that in this model, the winners are, again, the ultimate either developers or the end users who are focused on really trying to achieve these cross-border transactions. And you really try to use that glue of making it simple and using standards to get there.
Thank you, Danelle. Rory, so how do we, given the importance that we should attach to interoperability, the internet works reasonably well because, we have the common standard, we have the common protocol. How do we go, achieve that in the digital currency world, in your view?
So first of all, I would completely agree with Danelle's point that interoperability in the area of digital currencies is absolutely critical. So it's hard to imagine a world in which governments have completely supplanted the private sector in the currency space. So a fully governmental monopoly seems to be not realistic. Governments aren't necessarily going to be the best place to deal with things like user experience, to interface with customers, to innovate. But conversely, it's also hard to imagine governments ceding control to a single private entity. And so the space in the middle, where you have, on the one hand, competing private players, but maintaining a degree of interoperability so that you don't get these balkanized systems that can't transact with each other, that's where we are today, and that's obviously the vision we should strive for the future. The one thing that I would caution about the analogy with the internet is that the financial system isn't a permissionless world in the same way as the internet is. There are very well developed and frankly necessary regulations over money laundering, countering the financing of terrorism, and so on. And when we looked at, for example, at the first version of Libra, we just could not get ourselves comfortable with the idea that all of those concerns were met in the structure that they were putting forward. And so that was not something that we could be a part of. So even as it's vitally important, including in these conversations about central bank digital currency, to bear in mind interoperability, to make sure that every private sector wallet that holds central bank digital currency can transact with a different wallet. Even in that world, it's like absolutely critical that we maintain a focus on compliance and on achieving the same standards as the financial sector, as financial regulators demand of the existing system.
Thank you, Rory. So Renee, maybe I can come back to you. So for a relatively smaller player, so how do we, how do you see the leadership role? Who is going to, who should take the leadership role? How do we organize the discussions or the processes to achieve some standards or interoperability in the digital currency world?
Thanks for the question, and this may be a good point to just give a little bit of context about Celo as well. So, the three founders, three of us started working on what has become Celo 3 years ago. But over the especially last year and a half, since we open sourced technology and launched the first sort of testnet, as it's called, before the full launch earlier this year, we've seen hundreds of organizations actually kind of join us and start collaborating and contributing to Celo. So today, the Celo Alliance for Prosperity has over 115 members all around the world, and that includes big organizations like the Grameen Foundation that actually is just started using Celo and Celo currencies for a COVID-19 cash relief program in the Philippines, all the way to some of the established kind of wallets and merchant operators out there. And I think that sort of ecosystem approach is really important. First, to establish bridges to the established and existing financial players and ecosystem, but also because this is a task that's just too big for any one company or any one team to solve. And so kind of more specifically, kind of to your question, I would probably push back a little bit on what Rory just said in terms of the financial system isn't or shouldn't be a permissionless world. And I obviously agree at sort of a higher level that has good reasons, but I think there's a lot of room for innovation in the permissionless side of this. And when we kind of think about local currencies, functional currencies, community currencies, that I think we'll see an explosion of currencies and digital assets happen just because they're finally able to be used at a much bigger scale through technology, and most importantly on mobile phones. And I think there's lots of good precedent even with some of the mobile money systems when it comes to, say, KYC, that if within a certain community there are transactions happening, with kind of small sort of values, small amounts, that one can apply slightly. I see us being at a critical point in time where finally, we've been talking about blockchain solving some of the problems around financial inclusion, for that to finally actually start happening. And I think it's really important for regulators, not just right now, to look at this and educate themselves and see what this technology can do before just applying just kind of an old framework to this new technology. Specifically, I would say, there's the point Danelle made earlier about open permissionless systems. I think those are really crucial and critical, and we're seeing this with Celo, but from an innovation perspective, There are, people today building peer-to-peer universal basic incomes on Celo, building remittance solutions. They're integrating locally in Kenya with M-Pesa, right? All these things happen when there's an open permissionless system. It's all stuff that I would have thought, is really great if at some point, our team can do it, but, we would likely never have never gotten to that point because we would have been busy solving other problems first around the infrastructure. And so I think making sure from a kind of official sector perspective to encourage these open permissionless systems, I think is critical. Second, I think is to think about how to remove barriers of entry for new participants. And I think this is kind of the point about looking what's happened with the web, right, where some of that has unfortunately gone wrong, and I think we have a chance to we have a second chance here as we think about remaking the financial system. And third, I would say this is a great point in time too for the public sector to look at some of what's happening in the private sector and embrace some of these newer technologies and collaborate. I think at C-Labs, we have a lot of conversations where we're doing pilots with public sector entities. My colleagues, Jay and Ezekiel, are also part of several working groups at the ITU Standards Committee. And so I think this is a very important time for everyone to come together and learn from each other, understand each other's perspectives. And I think that will kind of lead to better outcomes.
Thank you, Renee. Let me now turn to Jonathan. I think e-currency has been talking to various central banks. You want to provide solutions on central bank digital currencies. Now imagine a world that different central banks have issued their own CBDCs. Now if they are all of different designs, different standards, and if you want to trade them, that's not so different from the current system where you have to get a quote, bilateral quote. It's not a particularly efficient system if you need a lot of human intervention. So how do you actually get to a situation where these CBDCs can be traded automatically on a common platform? Are central banks thinking about that problem, or what do you have any views on that?
The good news, though, is that central banks are thinking about this, and there has been a recognition that in the digital realm, central banks need to quickly adopt a new framework. I know as I'm listening to the other speakers talking about currencies, it's a loose term. People just say, well, you can trade this currency or that currency or make up a new currency. And we have to be careful when we talk about currency, because currency is essentially a sovereign instrument. And in every country, it is underpinned by the law of the nation, or in some cases, the law of the union. And these currencies represent a liability on the central bank. It is not a casual instrument where someone wakes up and says, now I have cooked up a new currency because my latest technology allows me to define it as a currency. It doesn't work that way. So the point that you're raising, Dong, is that we have sovereign instruments that are underpinned by the law of the nation that creates a currency that works within the nation's boundaries. Now, rising above that, we have some international reserve currencies. So you have reserve currencies that are also recognized as assets by multiple countries. There are several of those. And so for a transaction to take place from country A to country B, it's not just a matter of two currencies sort of coming together. It's a matter of exchanging from the originating currency into a reserve or a recognized international currency and then back out again. And this is primarily true in developing markets. In developed markets where the country's currency happens to be a reserve currency, well, there's essentially only one exchange that takes place, or the recipient is willing to accept the reserve currency. In the digital world, the question that you asked is quite pertinent. In the digital world, with two countries having a central bank issued digital instrument, how does that exchange happen? Now, the way we see it is that for that exchange to happen in an efficient way, number one, central banks have to participate. So this is not an exercise with just the private sector trying to make this happen. The bilateral nature of two central banks that are in the payment flow have to participate because they become ballast, basically underwriting their own currency on what we call, or what we would think about as, an international cross-border bus. Once they are the balance on this cross-border bus, private sector participants can participate because they're essentially regulated by their in-country central bank, and the rules of the road are pretty well defined. And so there can be a direct connection between private sector participants in country A and private sector participants in country B. In the middle, there has to be an automated mechanism for the exchange to take place, meaning country A's originating currency gets converted into an exchange currency, and country B then subsequently turns it back into the local currency. And this whole process can be automated as long as the security boundaries of the bus are secured, so that the liquidity or the transaction within the bus can be ensured, exchange from A to B, A to common currency back to B can take place. The participation of the central banks is what provides the ballast on this bus. Once the central banks are participating, the ability to execute from a CBDC in country A back to a CBDC in country B becomes eminently doable. The technology then that allows this to happen has to be essentially adopted by the central banks, and this is what e-currency focuses on, is to really allow central banks to get up to par on the technology, such that the private sector participants, whether that be commercial banks, e-money operators, payment service providers, or even new entrants like some of my colleagues are, can then participate on it to allow for this cross-border thing to happen. I want to go back to the original point I made when I spoke earlier, which is eliminating the risk components, the settlement risk component, the counterparty risk component, and ultimately reducing the amount of liquidity needed to execute a cross-border transaction is what will bring the cost of cross-border transactions down and the risks associated with cross-border transactions down. So that's what we try to enable.
Thank you, Jonathan. Does any of the panelists have anything to push back against on what has been said so far? Renee?
I have a quick rebuttal. So I actually fundamentally disagree with Jonathan. And you know, I grew up in East Germany where there was one TV station and one radio station. And you know, there wasn't really much choice there. But then it was the rise of the internet, and obviously, you know, the wall coming down. So it's good to know what would have happened if, you know, without that. But you know, now every kid out there has a YouTube channel and you know, a podcast, and so we've seen just an explosion of you know, expression. And I think with currencies, and I do use the term currency, I do see it as similarly. I mean, currencies have been a thing before central banks issued them, right? I mean, the first form of currency, of money, were things like shells. And today there are many examples around the world of things like local currencies actually really benefiting you know, communities and even driving kind of, you know, GDP, if that's a measure we're using for showing growth. And so I would say I think the only chance for CBDCs to actually be used from a retail perspective is to make sure they don't fall behind in some of the benefits that these other currencies, as we may want to call them, offer. Otherwise, you know, it may be like the fate that happens to the state-owned TV channel, where it's only used, you know, 10 minutes a day versus the rest of the day is spent on on YouTube and Spotify. So, I mean, that may be a little bit crass of a view, but I think conceptually, I do think that there's just going to be a big uptick and an adoption of these other currencies. And so I think for central bank digital currencies, they need to kind of tap into all of the same kind of technologies and features. This is where interoperability comes in, but this is also where I'm a big believer that they need to happen on open permissionless infrastructure.
So Renee, I would have fully expected you to disagree with me. I'm really getting to this because I think this will be the fun part of this conversation. So I think there's a reason why we don't use seashells anymore. So or coffee beans or stones or rocks. And the reason is that there is no underlying value associated with a seashell or a rock or a coffee bean. And for the same reason, cooking up new forms of currencies just because we're able to give it a name, I believe will sort of take us back to the same place where there has to be some sort of underlying pretense for the existence of that currency. And the underlying pretense is not technology. The underlying pretense is really the ability of a central bank to stand behind that currency and say, this is the currency of this country. And in the early days of central bank currencies, and I'm talking about physical currencies, the ability for central banks to do that took a little while to stabilize. But now, for the most part, with a few, very, very few exceptions around the world, central banks have successfully found a way to underpin that currency or their currency to essentially their balance sheet. I don't think we are going to rapidly go into a world where we're back to seashells and coffee beans. I think going forward, central banks will define their currencies, whether that be digital or physical, in the form of paper notes and coins. And I think what we're talking about here is what happens in the cross-border space. The cross-border space, to some extent, is a bit of the Wild West because there is no one sort of essentially regulating that space, and I can see a lot of private sector companies quickly gravitating towards it. But ultimately, for that cross-border space to be a safe space to operate, central banks have to participate. Now, we can argue as to how they participate, but there has to be some common medium across which this takes place. And the common medium is not a private sector company, Facebook, showing up and saying, we will become the common medium. The common medium has to be a common medium that's not hijacked by the private sector. And that's really what we're talking about. And how can central banks enable that common medium to exist, but still allow private sector participants? And I agree that private sector innovation is really important here. But how do you allow private sector participants to operate across that common medium? The internet, by the way, is a tricky subject because people throw the internet out as the way the future of central bank digital currency should work. But actually, even on the internet, there are certain common mediums that are essentially accepted, and the private sector doesn't get to run off with it. So whether that be DNSSEC or it's the internet protocol or whatever, those are accepted common mediums on which you're able to develop applications and allow YouTube to operate and for me to publish a video and so on and so forth. So those common mediums are really what we're talking about. And we can't run away with it and saying, well, the private sector is going to go off and build its own common medium and then everybody else will sort of, create their own currencies and off you go.
Thank you, Jonathan and Renee, for that exchange. I very much like that. Now, maybe let me turn to Rory. So how do you, I think what Renee is saying is that certainly in terms of services, features, private sector participants certainly have an edge because they have the incentives to innovate, to please customers. But central banks would argue that we have modern monetary policy that's based on economic science. We have forward-looking monetary policy. We maintain a unit of account that is very stable through business cycles, which is extremely important for welfare, for public welfare. So given all these different public policy, policy objectives, do you see any way for the public-private partnerships to work? How do central banks and private sector or international institutions, for that matter, collaborate in this space?
So, as I said in my very first answer, I think that public-private collaboration is absolutely critical in this area. There's no question about that. And so I think that there's truth in what Renee says, there's truth in what Jonathan says, and as usual, the right answer is somewhere in the middle. So there are absolutely areas in this space where the public sector has no comparative advantage. None of us want to have apps written by governments in our phones that basically look like they were written by the East German television company. And but at the same time, in terms of creating trust, in terms of creating financial stability, macroeconomic stability, promoting policy goals, there's no disintermediating governments. Governments are there; they should be there. And so the key is figuring out exactly where the lines are drawn, exactly how governments can incentivize private sector players, ensure compliance with very important public policy goals like anti-money laundering, like countering the financing of terrorism. And so, this is what this whole CPMI-driven process is all about. And it's very hard, and it's just starting. I mean, today is the launch of a roadmap, but the roadmap is just the first stage where you're looking at the map and you have the whole road to travel. And so all of us, in the public sector, on the private sector side, we need to be doing our parts in this process. Now, there are areas of this which are really, the work has to be done by the public sector. So there's no question that in things like harmonizing AML CFT, things like extending opening hours of RTGS systems, that is the work of the public sector, and it will make a huge difference to this cross-border space. On the other hand, there are parts of this that are really private sector responsibility, like harmonizing the ISO 20022 data messages to make sure that there's much greater ability to much richer messaging through the financial system and mutual compatibility. So and what the public sector can do is it can convene and it can drive this process forward, and that's essentially, I think, what this conference is just one piece of.
Thank you, Rory. I think this is a fantastic conversation. Unfortunately, we are almost up in terms of the time allocated to this panel. So let me give each panelist maybe less than a minute for you to summarize and deliver the message, the key message you want to audience to take away from this panel. Let me go to Dinelle first.
Thank you so much. There's so much to say on this, but I'll just say two things that I think are really important. The discussion that was just had a few moments ago about not likening this to the internet and being careful of permissionless networks, we have to remember that you're comparing this to Libra, which is a very different thing than what we're trying to focus on. Permissionless networks are the infrastructure layer that allows entities to build on top of them and to innovate and to create awesome ideas and to create products that are going to solve these problems that folks have all over the world, and they're going to solve financial inclusion because you can do it on your phone. You can make it so that people don't have to have bank accounts, and you can do it in 3 to 5 seconds. The comparison with the internet is that infrastructure layer, that technology layer. The notion that the AML and on all of the different regulations need to apply here is absolutely agreed upon. And those financial institutions that touch fiat on the edges are the ones that are regulated by all of the different geographies. So we cannot forget but that is the important piece of this. That is what creates the interoperability. That is what makes it so that this all works seamlessly. That is what makes it so that I could send Renee a payment to Germany and to do that in 3 to 5 seconds and to still use the existing financial infrastructure, but to use these new rails which make it faster, seamless, and usable for the developers and the end users. So that's just an important point I want everyone to know. Governments are exceptionally good at regulating fiat. We still want them to. Thank you.
Thank you, Dinelle. Jonathan.
I think two things. Number one, I think the recognition by central banks that they are and will be entering the digital world has been the most important step. And we've seen that already, and we're very excited about it. And I think e-currency's role here is to provide the technological capability for central banks to get up par with the private sector. The second important thing, and Dong and the IMF here is really important, is that we're having this conversation. The conversation recognizes that central banks and central bank digital currencies are soon going to become a reality. And when that happens, how does cross-border work? And I believe, as I've expressed before, the participation of central banks will actually eliminate the exposure and the risks associated with cross-border. And in the digital world, could actually iron out some of the challenges we have with cross-border payments. So thank you, Dawn, for hosting this. Thank you, IMF, for hosting this conversation, because I think this discussion at the public sector level is really important. Thanks.
Thank you, Jonathan. Rory.
So, first of all, again, I think that this process. Well, first of all, cross-border payments, huge number of stakeholders with very different strengths. You know, some of them are the innovators in the user experience and reaching unbanked people around the world. You know, that innovation must be preserved, and clearly some of the most innovative companies are going to be fintechs. They're going to be nimble. They're certainly not going to be over-regulated to the point that they can't do what they do best. On the other side, there are governments with sovereign interests. You know, what exactly the governmental infrastructure ends up looking like. You know, it's building cross-border structures among governments requires a lot of trust among those governments, and we're not necessarily at a moment in geopolitical history where there's universal trust. So, you know, there are some very interesting experiments of governments basically experimenting with taking over the cross-border payment rails. There's between Thailand and Hong Kong, there's a very interesting experiment, but it's complicated. And so in the interim, there's a lot of work that we can all do together in incrementally improving the current system. And I think that's the agenda that CPMI has laid out so well.
Thank you, Rory. Renee, less than a minute, please.
All right. Yeah, just super quick. Thank you for having us all, and I really enjoyed the conversation, the discussion. Hope it continues. Look, I think in a nutshell, open permissionless systems are critical. I do see central banks launch central bank digital currencies on open permissionless chains, whether that's Celo or Stellar. But I think that's the future, because so much depends on these being kind of breathing organisms that evolve over time, that make sure that they can always guarantee the best end user experience. And I would urge regulators to acknowledge and incentivize the development of this. And, you know, I think it's also a huge benefit from a risk perspective because of the public and transparent nature of these ledgers. And so I think we're very early days, so a lot of this is education, and having those conversations. I wouldn't actually want to suggest that we should build these things today, but we should carefully think about how that kind of unfolds over the future, and in collaboration with all these new technologies that kind of arise.
Thank you so much, Renee. So just before I close this panel, let me just advertise a little bit, you know, as part of the knowledge gathering and knowledge sharing education process. We also published a paper today, IMF staff paper, Digital Money Across Borders, Macro Financial Implications. It's available on the IMF website. So if you're interested, please take a look. And this has been a fantastic panel. Thank you very much for your participation. I learned a lot. And now let me close this panel. Thank you.
He is always a fan favorite, so I decided to bring him on the brand new show here at Stansberry Research. He's the author of Currency Wars. Jim Rickards joins me today. Jim, good to see you again, and welcome to the show.
Thank you, Danielle. Great to be with you, and thanks for inviting me as one of your earliest guests in your new venue. It's very exciting.
It's very exciting indeed, Jim, and I know you are working on a brand new book, which a lot of people